It gives me immense pleasure to announce that the Institute of Chartered Accountants of India has decided to organize its first ever Global Professional Accountants Convention, GLOPAC, on the theme Connecting the Globe, Creating Value, on November 24th to 26th, 2023 at the Mahatma Mandir, Gandhinagar in India. GLOPAC is being celebrated as a mega event to showcase the important role that the accountancy profession has been playing in the economic and social development of our country.
Globalization has made the world one village, and the services of chartered accountant are also available globally without any boundaries. The Institute of Chartered Accountants of India is also devoting significant efforts towards global networking. The convention shall be attended by more than 3,000 delegates from around 40 countries. I would like to extend a warm welcome to the fraternity on behalf of ICI to attend and participate in the first ever GLOPAC.
ICI is geared up to welcome delegates from across the globe at the GLOPAC.
Government Financial Management of the Institute of Chartered Accountants of India, I welcome you all to the series of virtual conclave on recent accounting reforms in government being organized by the committee under the theme Azadi Ka Amrit Mahotsav. Today's topic of webinar is self-sufficient and self-sustainable municipal bodies in India. Today we have with us Sri Prasanna Kumar D, Vice Chairperson of the committee, our speaker C.K.R. Parveena, expert in accounting, auditing and financial management in ULBs, and moderator of today's webinar, C. Anand Jain, former chairman of Indore branch of ICAI. About the theme, municipal bodies in India have also started taking several initiatives to make themselves self-sufficient and self-sustainable to enhance their resources and reduce their dependency on grants. Today's webinar will cover all innovative ways to increase their revenue and resources. The viewers can ask their question in the chat box, and members can claim CPRs to unstructured CPRs after conclusion of this event. Now, I welcome CA Anand Jain, sir, moderator of today's webinar. CA Anand Jain is a fellow member of ICI, also a law and commerce graduate. He's a practicing CA, and his area of practice include RERA, government audit, internal audit, consultancy to real estate developers. He also appears before Appellate Authority of RERA and GST. He is serving Indore branch since last 13 years and had been the youngest elected management committee member. He has served as chairman of Indore branch 2022-23 and also taken responsibility of serving as SICASA chairman 2016, secretary 2017, and CPE chairman 2018 of Indore branch. In his tenure as chairman, the Indore branch had organized 230 landmark programs and had been adjudged as best branch and best SICASA of ICI at national and regional level. Now I welcome you, sir. Now the platform is yours.
Thank you, madam. So it is a great proud and privilege to extend a hearty welcome on behalf of the Committee on Public and Government Financial Management. I welcome to our Vice Chairman of the committee, C.A. Prasanna Kumar D, sir, and the speaker of today's session, C.A.K.R. Praveena, madam. As rightly mentioned, that the roles and responsibilities of municipal bodies in India are increasing day by day, and which necessitated more funds to carry out the functions entrusted to them. In these directions, municipal bodies are taking several steps to make themselves self-sustainable to meet out the funding requirement while reducing their dependency on the government grants and respond to the needs of the citizens and other stakeholders. Sound financial management system at municipal body assumes high importance to raise additional funds on the strength and quality of their work balance sheet. ICAI, as a partner in the nation building, is also making significant efforts to improve financial reporting and management in the municipal bodies in various ways, such as by supporting them in their capacity building initiatives, formulating accounting standards for local bodies. Today's virtual conclave will throw light on how to access financial sustainability of municipal bodies, ways to augment their resources and revenue, public-private partnership arrangements, and municipal bonds. I hope that all the viewers will be benefited from this deliberation. We are privileged that today we are having C. Prasanna Kumar sir amongst us, who is the Vice Chairman of the committee. And before inviting sir, I would like to introduce sir. He is a Bachelor of Zoology from Loyola College, Chennai, and MA from...
So 3-4 sentences.
Sure, sir. Sure, sir.
Yeah.
Prasanna Kumar sir has been occupying several positions in the affair of the Institute right from Sikasa, branch, region, and central council. During his student days in the CA course, he was secretary, vice chairman of the Southern India Chartered Accountants Student Association. He has served Vishakhapatnam branch as treasurer, secretary, vice chairman, and chairman of the branch in 1998 to 2002. He was the member of Southern India Regional Council from 2007 to 2016 and had been the chairman in 13-14. Now he has been elected as Central Council member for the period 19 to 22 and 22 to 25. With these words, I request sir to please welcome all the viewers to this conclave.
Yeah, thank you. Respected CA Anand Jain, the moderator for today's session, and CA Pravina, the eloquent speaker in today's session, and in absentia, CA Kemusha Soni, the chairperson of the Committee for Public and Government Financial Management, and under whose direction all these series of webinars and all the and whatever is being done to for the entire government financial management, double accounting system, and all those things are happening under her stewardship. And my dear viewers, so good afternoon to all of you. It's a great privilege for me to welcome you all once again for today's webinar organized by CPGFM. As you know, this series has been started so under the direction of our Honorable Chairperson CA Kemusha Soniji on the recent accounting reform in government financial management. And you know, this virtual conclave series, so this is the fifth in the series, and the fourth conclave what we had has been appreciated by everyone who has participated, be it a practicing chartered accountant or the officials of the government departments. So they are all appreciated. So thereby, it is an encouraging factor for us to have many more the series of conclaves this year. As you are aware, today speaker K.R. Pravina, you must have heard. See, because I don't think we've got more than 10 or 15 speakers in the entire country who can speak, on these topics regarding local bodies on any topic of this kind. And she's one amongst them. And she's very renowned personality in not only Karnataka, entire country on local bodies management. And the first time when we wanted to constitute a committee, a local state level committee for CPGFM, and a couple of years ago. So I just speaking to CA Pannaraj, who is the present SRC chairman. You are referring to her name. She may be useful to us. We have to open her somewhere in this particular committee also. So I am sure she will take us through the entire subject so that she will enlighten us on the various nuances involved in the government financial management. As you are aware, there are three types system of governance in the country, majorly. That is central government, state government, and local bodies. Central and state governments, central government, as you know, they are very resourceful. You have seen the way in the, their direct and indirect tax collections are going year after year. So they are very resourceful. State governments are also reasonably good, but some state governments are into trouble that is there in the game. And as far as local bodies are concerned, their resources are very meager. They got only collection from some 2, 3, 4 heads. So beyond that, they don't have. And anything they do, they say depending upon inflation and to meet the needs of the people, to meet the expectations of the people, they want to increase the resources, which is to be paid from the pocket of the common man. So there will be uproar everywhere. So the political leadership, other leadership, they will not agree. Thereby, the resources are very much limited. Under these circumstances, how do they manage the finances? They cannot remain like that, because whatever the common man's need, be it the maintenance or the creation of infrastructure, falls squarely on the local governing bodies. And they cannot keep quiet, because if if water is not coming, a road is not there, something is there, everything, the local governance matters only. Under these circumstances, how to deal with this particular subject, which is a very sensitive one. So there are one thing, how to increase the collections, and so that every citizen becomes a tax compliant and they pay the resources. Number one. Number two, their expenditure, wherever the expenditure can be reduced, at the same time maintaining the resources. So that also should be looked into. And like Anand Jain was telling, public-private partnership that need to be encouraged. And on the top of all these things, they have to resort to borrowings, and also maybe the municipal bond, green bond. There are so many models out there. They resort to that, so that they invest that not for the maintenance purposes. They invest that in whatever the people need, particularly income generating assets, at the same time meeting the needs of the people. These are the things that need to be done. So there's no other way, because governments, central government, that is the reason why, looking at the importance, what are the funds that need to be in self-governing bodies, they send it directly. They don't route to the state governments nowadays. It has been happening quite some time, because that will be used somewhere else if it is routed to another government. That is the importance the government of India is also giving. With this background, so now I'm sure we'll invite K.R. Pravina, a chartered accountant, renowned chartered accountant on these lines, to deliberate, so that all of us learn a lot from this by end of this session. With this, I welcome once again now over to the moderator, Anand Jain. Anand Jain is also a very interesting person. I happened to meet him in Indore. The way in which they organize programs in Indore, everyone should learn from them how they organize. So it's a great experience for us. I too had a personal interaction with him. So I'm proud that he is also attending this webinar and moderating that one. With this, once again, welcome you. Thank you very much.
Thank you, sir. You have rightly mentioned that the government is focusing on the sustainability of various activities at all the levels. And as you have mentioned about Indore, sir, it is my privilege to inform that Indore is the first city who has launched the green municipal bonds through public issue. So I hope Madam will be addressing all the things, and the viewers will be benefited. Before inviting Madam for her deliberation, I would like to introduce her. Madam Pravina is a chartered accountant and an executive director at Management and Governance Consulting and senior finance professional with more than 15 years of experience in the industry and consulting. Her area of consulting includes financial management, internal audit, management audit, information system audit, business process re-engineering, business plans, and feasibility studies. She has worked a lot in strengthening the local fund audit at departments and strengthening the audit and accounts of the functioning of the government and public sector, etc. With these words, I request the madam to please enlighten all the viewers with her experience. Over to you, ma'am.
Thank you so much, Anand. Can I share screen? You can confirm if you're able to see the screen.
Yes, madam, it is visible.
Yes, we're able to see.
Thank you, sir. So I'll start by first expressing my very heartfelt gratitude. It's a privilege to be part of this program and speak to all of you on this 75th year. So I think it's a wonderful thing organized by the Committee of Public and Government Financial Management. So first of all, my thanks to the team, and thanks to Prasanna Kumar sir for the very generous introduction. So one thing I want to just start off by saying is, like Anand and Prasanna Kumar sir rightly introduced, we do know from experience that the type of structure in different states and the level at which the bodies are, the level at which the municipal bodies are in different states really varies, right? So depending on the economic development, depending on what is priority in that state, etc., we find that the third tier of governance, the self-government, is in with different levels of maturity. So I come from an experience of one part of this. So it is possible that whatever I am saying could be biased towards the states that I am familiar with. So I definitely invite you to, give your comments as part of your questions, or of course, catch up with us later so that we are always happy to understand what's happening in other states. And Anand, just to confirm to you, Indore is definitely there in the slides in a couple of places, right? So with that, let me just start off. So today's topic, of course, is on self-sufficient and self-sustainable municipal bodies. So I got very curious, and now this AI apps are a new thing, right? So I went, you can see on the screen, I went to this Tome app and I sort of tried to generate a picture of what a green sustainable city would look like. And what you're seeing in the background is what the AI generated. So you can see it is trying to incorporate a very, environmentally friendly thing where we have the concrete jungle as well as our green jungle, right? So the AI with its own, wisdom from whatever learnings we have given, this is what it is visualizing. And many of us, we are also thinking of something where the cities can live alongside the ecology and with adequate biodiversity and responsibly, etc. Right? So there are so many aspects to it, and all this is what we are going to see today. Before that, since we are, most of us here are accountants, so we start with understanding the subject matter. So we are looking at the materiality of what we are discussing, right? So just to broadly understand, you can see on the screen, let me just take my pointer to express to you. So we have about 4,805 urban local bodies. So municipal bodies are also called urban local bodies or ULBs. So in my slides, if I've used them synonymously, please bear with me. So 4,805 across the country, you can imagine, the size of this network we are talking about. Out of that, almost 250 are municipal corporations. Many of the municipal corporations in India are larger than the, Sensex top 10, top 50 companies in India. So most of us, we just don't realize this, but that's the size that we are talking about. Of course, apart from these, we also have cantonment boards, which are also considered part of, urban centers. Similarly, if you look at the second diagram that you are seeing there, we are seeing how much of functions have been devolved by the states. So just for those who are new to this subject matter, I'm just giving a bit of background. So what has happened is, pursuant to 74th constitutional amendment, what we have done, we are, as Prasanna Kumar sir rightly introduced, we have 3 tiers of government, right? Central government, union, state, and we have the self-government or the local bodies. And in local bodies, we have urban and rural. 74th Amendment, what did it do? It said that the state should devolve some of the powers and functions to the third tier. So it is like a delegation of powers, right? In our common parlance, we call it delegation. So that's what has happened. So what you can see from this table is, across the states, you can see there are 18 functions that 74th CAA is talking about. But can you observe the difference? In different states, you find that the devolution is at varying levels. So number of functions they have devolved itself, you can see how much difference is there. I'm just trying to give this as a tidbit for you to get an idea of where we are at in respect of this, right? So for that, these two are actually information which is part of a joint study by Niti Aayog and ICAI. So this is on transition to accrual accounting. As you know, the third tier of government is supposed to be following accrual based accounting, while the union and state continues to follow cash basis of accounting. Municipal bodies are supposed to be in accrual basis of accounting. Of course, the transition again is at varying levels, and that's the focus of this particular report. To understand also quantitatively, we know that the municipal expenditure in India is roughly about 1% of our GDP, and it's sort of stagnated there. That's what we find. While if we look at contrasting countries like Brazil and South Africa, you can see that it's 6 to 7%. So obviously, the higher the expenditure on urban infrastructure, you are going to have better economic activity, better support system, and therefore better economic development. Therefore, always the recommendation is that the amount of spending should be pushed up. So this is roughly about, I think the GDP is about 160 lakh crores INR now. So which means this is about 1.6, 1.7 lakh crores is the size even today, which we are talking about when we are discussing municipal bodies, right? And this is going to definitely increase. So we will also see later how it is going to increase, etc. This I'd like to highlight a couple of things to you. This presentation as well as this, I think the recording is going to be available to you. Wherever I have used reports, I have quoted them as source here. And please take the time to, of course, all these are very detailed studies and reports. So please take the time to go through them later. I'm sure you will find it, very interesting, both from a professional perspective and just simply as citizens of India. This is interesting for us, right? So this is a bit of a snapshot on what the subject matter of what we are going to discuss. Now I'll jump into the coverage. So during the course of over the next 1.5 hours, what I will try to do is I'll try to take you through these 4 sections. The first one being an introduction on what we understand by self-sufficiency, self-sustainability, and what it means in the municipal body's perspective. That's the first one. Second, we will look at the key issues and challenges that municipal bodies face. I'm sure this most of you will actually know, but still I want to discuss from the perspective of today's presentation. The third one would be what are generally the policy measures that are in place or that are coming into place which are facilitating this journey. So obviously we are speaking in a future forward-looking futuristic manner. So there are many schemes that are already in place and there are some actions that are underway, right? So we will look at that also. And last but not the least, we'll spend some time on what are some of the strategies that different municipal bodies adopt to achieve self-sufficiency and sustainability. So particularly here, we will look at 3. One is revenue augmentation, which is revenue improvement. What are the different ways in which, they can improve the municipal bodies can themselves improve their own revenue. The second one is we will try to see something on a little bit on PPP and the different ways that they are structured and how it becomes relevant. And we'll also look at some examples for this. The third section will be more on municipal bonds. As you all know, in one shape or the other, you would have seen that they are in the news. So we will look at what are the, typically the parameters and components surrounding municipal bonds issue and aspects of it. Last but not the least, we will also look at some other innovative approaches. I do believe that the first 3 in different permutation combinations will, result in other methods. So there are a lot of hybrid methods that are in play. So we will try and quickly look at that also. So just a bit of a quick disclaimer here. One is that I could be using urban local bodies and municipal bodies synonymously. Please bear with me because I'm used to referring to municipal bodies as ULBs. The second is that there are many dimensions to self-sufficiency as well as sustainability, right? All of you know that we have 17 sustainability goals. So, but we are going to discuss today very much from an economic and financial perspective. While we will certainly discuss the other aspects also, but our discussion today will be more from a financial perspective. That is one thing. The other is few select strategies is what we are going to discuss today. The 3 which I explained to you, but there are many others obviously, and which we will simply get introduced to. Other thing is, as Prasanna sir was also explaining, this is a sort of emerging space and a lot of reform activities and future looking activities in this space are sort of evolving. And so many points which I'm discussing might be forward looking and may not already be implemented. So it is all a WIP. And for the same reason, I'm sharing my experiences. So feel free to share your experiences. I just got to know we don't have a chat facility because this is a webinar. However, please feel free to share it as feedback, as comments, or if you want to email to me later also. We are happy to always understand what is happening in other parts of India. So with that quick introduction, I'll directly jump into the first part, which is going to be an introduction into self-sufficiency and sustainability. Right? The first part is on self-sufficiency. What do we mean by self-sufficiency? Basically, we are trying to say ability to generate your own revenue, have your own financial resources to provide your services or to provide whatever you have promised to the citizens without any support or reliance on external finances, external agents, or even other levels of government. So this is what we mean by self-sufficiency, right? Just like in agriculture, we mean that if it is self-sufficient, you mean that you are growing stuff which you yourself consume, right? In the same way, we are trying to say we generate our own revenues and we take care of ourselves. So just like what corporates are able to do. So this is what we mean by it. Now, what it helps? Why should I be self-sufficient? Why cannot I not be reliant on other levels? So there are some important reasons for it. The first is most important according to me. One is you have greater control over your own finances. So the moment I generate my own money, assuming I am a municipal corporation, then I have greater administrative and financial control over it. So I can decide what to spend towards. And this was the very premise of the third level of government, isn't it? So the very reason for creating it was to ensure you have customized solutions in the grassroots. So that's why we call it self-government, right? So to facilitate that, there should be that autonomy, as we call it, financial autonomy. What happens is when I keep getting grants from other levels, I continue to keep that umbilical cord, and therefore I'm not able to get rid of the administrative and political control or interference. And this is a very big roadblock for many of the urban local bodies. I'm sure in your own respective cities and towns also you will be experiencing this. The second one is increased flexibility in decision making. As I said, rightfully you are able to decide where you want to spend the money depending on your jurisdiction's priorities. It could be that in Madhya Pradesh, water scarcity is the problem. However, perhaps in Haryana, the pollution is the problem. Or in Karnataka, the water management is the problem, saving the lakes or something like that. So therefore, you are able to prioritize and apply and make your decisions yourself. The third one is the ability to respond more quickly and effectively to the needs of their communities. As we know, each place, the closest to them is the ULB, right? That's the first point of connect for them. And therefore, if the ULBs have greater autonomy, they'll be able to respond to the communities faster. So these are all some of the benefits from being self-sufficient. They don't have to wait, ask for money, then get it sanctioned, then comply with those sanction conditions. All those delays and inefficiencies can be removed if they are self-sufficient. So I think it's very much common sense for us to understand why it is important for municipal bodies to be self-sufficient. What you are seeing on the right hand side is a outcome of a study report by the this is also it was commissioned by ICRIER. And as part of the 5th FC's study, they had done this analysis. What you can observe is the yellow line is the percentage share of own revenue. Can you see that it's dropping? The share of own revenue of municipal bodies is dropping. From 51%, it has dropped to as low as 43%, right? However, you can see that is common sense, right? So therefore, the share of central state grants transfers is increasing. It has gone from 37% to almost 44%. This is very much unfavorable for us, right? So therefore, this is a very important red flag, which the government at all levels, they are trying to fix it. So I'm just trying to give this as a context for you to understand why this is a subject matter which we are discussing with so much seriousness. Right? So please go through that report also. It is there in RBI's website. So now we have understood self-sufficiency. Now we will try to understand self-sustainability. Sustainability is a slightly larger terminology. In fact, in my understanding, I will say as part of the economic feasibility, self-sufficiency is also a subset of it, right? So generally, when we say sustainability, what do we mean? We mean that ability to meet our present requirements without compromising the future generations and still ensuring we meet our needs. Basically, we are talking about responsible spending, where we take care of our world and our resources available to it and things like that, right? So, and the biodiversity and things like that. So that's what we mean by sustainability. When we say self-sustainability, especially in the context of municipal bodies, what we are trying to say is being able to address the different aspects of sustainability by themselves, which are depending on external. So that is what we are trying to say. So when we say we are expecting the municipal bodies to be self-sustainable, we are trying to say they are self-sustainable on their own. That's what we are expecting. So a little bit to understand sustainability, we know that it is the converging point between economic aspects, societal aspects, and environmental aspects, right? So we want to achieve all these goals, and we ensure that if all three are taken care of, then we consider that venture or that project or that measure as sustainable, right? So when we say society, what do we mean? We want to be considerate of standard of living, education, jobs, equal opportunity, basically having a very equitable and just society. That's what we are intending. When we talk about economics, we want to have growth, we want to have profit, we want to be cost saving, we want to invest in innovation, research, etc. Right? So already we can see how it can be conflicting, right? So you cannot have growth as well as keep it socially responsible. And when you do that, there are sort of limitations, right? So that's why we have this Venn diagram where only where all three merge, we consider that sustainable. Coming to the third one is environmentally responsible. We know today pollution, today water scarcity, all these are very climate change. They are mega problems. They are high risk. So we want to be mindful of resource use, pollution prevention, as well as biodiversity. So you can see that where society and economics are meeting, you would have measures such as better business ethics, fair trade, worker benefits, ensuring minimum wage, ensuring good worker conditions, ensuring good housing for your people working with you. All these things will fall under socio-economic aspects. When we look at between economics and environment, you have things like being considerate of energy efficiency, using renewable fuels, giving subsidies and incentives to green buildings, let us say, right? Encouraging green technology, all those things will come into play. And when you look between society as well as environment, we will look at things like conservation policies, environmental justice, global stewardship. In fact, I'll say we'll also look at having good consumer behavior habits, so that people buy responsibly. All these things are what fall within this gambit. Now here, what we are trying to say, therefore, I want to do projects which are socially equitable, which are economically viable, as well as environmentally responsible. So in that sense, I want to be sustainable, and I want to be sustainable by myself. So that is what we are seeking to. So let us understand this a little bit more in terms of municipal bodies. So in a very proper definition, we say it involves balancing economic, social, and environmental considerations to ensure that development is carried out in a way that is responsible and equitable. So when I'm selecting my projects, when I'm deciding where to spend my money, I ensure that I consider all these three parameters. First one being economic or fiscal sustainability. So managing my finances and resources, ensuring I have long-term stability and growth. This is the reason I was saying, when we say self-reliance and taking care of yourself, autonomy, it comes under this also in a sense, right? Self-reliance comes under this also. The second one is environmental sustainability, where you are able to protect and manage natural resources, ecosystems in a way that promotes long-term viability and resilience, as well as it should support the well-being of the local community, because we do have in different parts of India communities which depend extensively on the environment, right? So you have tribals in forests, you have people who are dependent on animal produce, all these things. So we want to ensure we take them into consideration when we are making decisions. Third one is social sustainability, where we are looking at the ability to promote social progress and equity and ensure that everyone has access to all the basic services and opportunities. So we also want to ensure we don't compromise the future generations. So this is basically the landscape of what you're trying to do when you want to be self-sustainable. So a quick link up to, while this is not directly on the subject matter, a quick link up to why sustainability is gaining importance. I'm sure from other programs where you have had a chance to understand SDGs, you will know that there are 17 goals that we have set for ourselves as world citizens. as part of the UN's initiative. And of course, India has made her own commitments on what we want to achieve by 2030, right? So we know there are 17 goals. And here I want to highlight to you the 17th goal, which is partnership for goals. And in this, it cannot be denied that municipal bodies are a very important partner. So if you look at each and every goal, you will find that municipal bodies have a role. They have a role in ensuring poverty reduction. They have a role in reducing hunger. They have a role in health well-being because they provide sanitation and health and other facilities, quality education, clean water. Whatever you look at, all the 16 goals, you will find that definitely your municipal corporation or your municipality has a role to play in it. So therefore, this is very important to understand that we cannot ignore municipal bodies' role in achievement of these goals, right? So we know these points, so I'm going to quickly skip over them. We want to basically be responsible global citizens, and therefore sustainability has been really having a very increased importance. So a quick look at India's ranking. Again, this is NITI has a SDG India index dashboard. So very interesting dashboard. They keep updating it quite often. So you can see each goal. So each of this is one goal. So if you look at hunger, we are at 47. If you look at solar or renewable energy achievement, we are at 92. So all these things, they are also putting it out. Have a look at it. So out of interest, India is ranked 121 out of 163 countries in SDG achievement, right? Previously, we were in 117. You can see that we are going farther away from achieving our goals, right? This is partially because other countries are ramping up efforts and we are having other challenges. We had challenges particularly because of COVID, etc. But we know from this that we have to watch out for this. So therefore, from our discussion, we have sort of completed part one. We know that two important features are very important are key for us to check off saying, yes, this municipal body is self-sufficient and sustainable, right? The first one being it should be able to finance its own projects. Particularly, it should be able to plan long-term and ensure continued delivery of its services. So this is one important parameter for us to say whether the municipal body is self-sufficient and self-sustainable. The second one is the ability to implement projects on its own. Particularly, the project should be economically, socially, and environmentally responsible. So if a particular municipal body is able to do both of this, then we can conclude that they are self-sufficient and self-sustainable. I hope this makes sense to you. So I'm going to try and take you through the strategies, and then we will come back to this and see whether we feel it can be achieved, right? So that's the point of this. Moving on to the second section, we will quickly look at what are the key issues and challenges. So if I put this question out to you, so if I were to go and ask, if I walk out to the road and I were to ask people, what is the main complaint? I am from Bangalore. So what is your main complaint against BBMP? What all they'll say? They'll say apathy, nobody cares, nobody is responsible, money is wasted, projects are not completed in time. You can imagine, right? I am sure this profile of problems are very similar. While it's possible that in one place it's because of roads, in another place it's because of water. But I'm sure the general, the reputation, unfortunately, which our urban local bodies have earned is not great. So the first step for us in this journey is to first acknowledge that and know that we are having this problem so that we start fixing it, right? So when we look at state of municipal bodies, the first problem anybody will say is they don't have money. That's what they'll say, right? Own source of revenue is inadequate. Even otherwise, we have seen at country level itself, only 1% of our GDP we are spending. While how much in urban areas, how much population is almost 35% of the population is in urban areas. So we are spending very little. So this is one problem. The second one is over-reliance on central and state government grants. We have seen this also. Third one is poor planning. So things not getting done, things not being planned. Somebody comes, lays the road, and then somebody comes and digs it up. Our pet peeve, right? Very common problem. So all these are issues. The other is unsatisfactory service delivery. Things take time, processing takes time. Recently, I saw one article flying around that somebody was so disappointed, it took a very long time to float a company, they wanted to go back abroad. So all these are, they cause ill repute, and they cause dissatisfaction among citizens. The other point is increasing demand. So we cannot deny that the demands on the municipal bodies also is increasing, right? Because the population is increasing, the economic activity is increasing, all these are increasing. Therefore, there is a very high increasing demand on the ULBs. The other problem we have is a lack of accountability. So in this lack of accountability, I'll discuss a sort of a subset point also, which is, we usually call it as multiplicity of entities, right? There are too many different entities which are there. You have a smart city corporation, you have boards, development boards, you have your municipal bodies, and end of the day, what happens is nobody is answerable, right? So if there is a problem, everybody disappears, and this is another very common complaint. The other issue that they face is low citizen participation. This is partially also because in many states, elections are not conducted, right? And also the way people work is very opaque. So the transparency levels are low. It becomes very difficult for citizens to participate, as well as from the municipal body side, they are not reaching out. Of course, there are a lot of NGOs and other social partners who are trying to improve this, but these are definite problems. Last but not the least, in fact, for me, from our government consulting experience, I would personally say that this poor capacity is core. It is at the heart of this whole problem, because you will find that there are very few people who are it's on two ways, right? So one is the vacancy levels are high. So first of all, the number of people itself, they are very thinly spread. So they are trying to do 20 things. So they are very tied up, one thing. Second thing is, they are not adequately trained on newer things. If you want them to embrace technology, if you want them to adopt accounting standards, you need to train them, right? So this capacity building also has become a big problem. As Anand was telling us at the start of this session, this is clearly understood by the institute, and we are also reaching out to help them on all these areas. But then this sort of gives you an idea on generally what the state of municipal bodies is. We know this is what we also have an impression like this, right? Particularly, what are they? So therefore, when the municipal bodies are with all these, let us say, issues, then what are the challenges? If you are a financier and if you want to finance municipal bodies, what would be your challenges? The first challenge will be that many projects may not be what we call as bankable projects, right? So bankable projects are typically financially viable, isn't it? If you're doing it for your client, if they want to go to the bank for let us say a term loan, then what do? We do a financial projection and we say, we are looking to open 5 more shops in the next 3 years, and therefore we will have enough money to repay you. However, if you look at the typical projects undertaken by municipal bodies, they might not have that sort of feasible cash flow, right? Or it may be the cash flow will come at a much later date. So typically the profile of projects undertaken by municipal bodies might not be typically bankable. This is one issue. The second issue is that the amount of investment, it is likely to be huge. There will be large ticket. So a good indication we can get from the type of money that is going into metros, type of money that is you can see is getting raised in the municipal bond market. They are all in hundreds of crores, right? So therefore the amount is quite huge, but there is no direct revenue generation. So therefore this is definitely a conundrum for financiers. The other is revenue generation over a long term. So you cannot have a short-term loan at all. So the financing term itself is going to be, the gestation period is quite long. The other is social benefits may not lead to revenues. It is possible that you have to do a particular project which will not have revenue itself, not even that it's not viable. It may not have revenues at all. So this is another issue. The other is there is high risk. So high risk in many sense. One is whether you will your budget you'll go over your budget, whether you'll be able to finish in time, whether suddenly this becomes unacceptable to that particular community, whether you may have other political or governmental pressures, whether some new regulations may come like this, the different risks surrounding the projects. It is quite high risk profile projects what we look at, right? Poor or non-existent credit history. So typically, if you look at municipal bodies, as we have seen already, they don't have their own revenue, right? So either there is a possibility they might have never borrowed, right? So there is no credit history, or it is possible that the credit history is not so great. There may be a few defaults, they might have delayed. So all these problems may be there. So this again causes credit risk. Therefore, it is difficult to finance these projects. Long payback we have seen. The other is high upfront cost. So because of all these complications, you can imagine. So very much getting into it and financing them itself can be a high risk. So because of all this, so now we have painted a very negative picture, right? So we started off saying we want to become self-reliant and self-sustainable municipal body, but now we sort of came to a roadblock where we are now concerned. Okay, let us see what we can do in the next section. So these are all known issues. We know that all these problems are there. We will now look at what are the sort of policy interventions or what are the sort of changes in this environment. So just like in a business, you have a business environment, the government and the municipal bodies also operate in an environment, right? So in that environment, what are the changes that are happening and how we feel that this can, help them to move in, overcome some of the issues that they face. So I want to take one by one, and some of this we will discuss in detail later also. The first one being strong reform. So there are a lot of reforms that are happening in the municipal finance space. Basically, all the efforts are oriented towards making municipal bodies an attractive investment. So you will find this in multiple places. You find it in the budget speech, you find it in scheme guidelines. Everywhere we are trying to improve the credit worthiness of municipal bodies, particularly in the area of municipal bond. So you can see evidence for this everywhere. This is first one. Second one is actively encouraging municipal bodies to improve their own funds. So own funds meaning either improving their own revenues or their own sources of funds. So ensure that they have their own sources of funds. So particularly, you might have seen this in the news also, as president of G20 nations, India is seeking to encourage more than 30 of its cities are going to enter the municipal bond market. So the market has been open for almost 2 decades now. We have only had like 13, 14 races, but we are planning to do 30. So you can see the number is really jumped. So that's the sort of encouragement we are having. The third bullet is very important from my perspective. What we find is the newer schemes that are introduced either by the central or the state government or by different ministries. What we find is by design they encourage these things. The first one being by design they encourage the municipal bodies to raise their own money. One example of this is there is a reform incentive if money is raised through municipal bond issuance by the municipal body under Amrit, and this is a cash incentive. So if they raise money, they get money is credited to them, right? So therefore, incentives like this you can find increasingly. It is littered across the newer schemes. The other is embracing technology. Everywhere you will find that they are trying to automate the M&D systems. They are trying to automate the citizen service portals. So all these measures, we know, most of us, we don't pay our property tax physically, right? So we pay it online. So all this, definitely embracing technology is helping them in reducing overheads as well as improving the completeness of their collections. Improving M&D, so this also indirectly they are giving control to the municipal bodies to oversee what is happening in the projects, right? So they are strengthening monitoring and evaluation, giving measurable metrics, and in all the schemes you can find that they are improving M&D. The other is there is an orientation towards clear, measurable, outcome-based milestones. So this sorts of gives the municipal bodies a clarity on what they are seeking to achieve, right? And therefore, that is another thing. Last but not the least, you can find that there is a sustainability goal orientation in all our schemes, right? So you will find the references to gender equality, inclusiveness, environment, all this you will find. So you will find schemes where they expect women to be the allottees or beneficiaries. You will find schemes where particular sections or of the society are encouraged to be beneficiaries. All this they are trying to do. So these are all some ways in which we are having policy measures whereby we are pushing or nudging the municipal bodies to be both self-reliant as well as have a good understanding of sustainability. Finally, another positive incentive that the government is attempting at government and other bodies are attempting is to have these rankings, ratings, awards, etc. So they promote a sort of healthy competition among the different municipal bodies. So we can see all these different measures. Maybe all of them are not strictly policy measures, but we can see all these changes in the environment which are sort of orienting towards this. So I've taken Amrit as a sustainable initiative just to highlight to you some of the features of Amrit, so that whatever I'm saying, instead of being theoretical, you'll be able to relate to why I'm saying that, right? So we all know what Amrit is. Amrit is basically we are trying to make the city's water secure and providing functional water connections to all households. The current mission per se is to run a people's program. So you can see by running a people's program, the inclusivity is brought in to provide 100% sewage and septage management in 500 Amrit cities, right? So you can see that it is a water management program. So these are different features, but I want to just focus on a few features where the policy reforms or the changes in the thinking, which I was talking about, we can see it established, right? The first one being successful implementation of reforms is incentivized. So they have some named reforms in the operational guidelines of Amrit, and they are saying if those reforms are implemented, then they will give additional incentive. So you can see how they are encouraging the municipal bodies to be sustainable. The other is technology submission. So in this technology submission, what they are doing is they are encouraging the urban local bodies to IT facilitate different parts of this project implementation, right? So again, to make it easily accessible to everyone, to make it easier to oversee all these things, right? Then you can see they are also encouraging community participation, our social goal, which we were discussing. We can see that is getting achieved here. The other point is outcome-based funding. So they are not giving the funds just like that. Depending on achievement of milestones, they are giving partially so that money is spent responsibly. The last point is again very important. So PPP is generally considered to be it ensures self-reliance, because without the government's intervention itself, PPP projects can be done by municipal bodies, right? So therefore here what they have done is they have said in million plus cities, at least 10% of the total fund should be spent on PPP projects. So they are trying to bring that culture of use of innovative financing. So this is just, I wanted to give a snapshot to which evidences this change in mindset. We'll see a few other examples also. Amrit, we have already seen. We also have the PMAY scheme, which obviously is oriented towards sustainable cities and communities, goal number 11. So there also a lot of such things happen. And in schemes like PMAY, what happens is money comes through automated system called PFMS, right? So PFMS is a very good central system, again IT enabled, so there is very good transparency and you are able to ensure very easy reports, and you can look at it very quickly. So this is another one. Then we also have other schemes. I wanted to give some, I have taken particularly central scheme examples because everybody will be able to relate to it, but I assure you that there are state schemes also. One example are the canteen schemes, right? So we know several states which have subsidized canteens. So where subsidized food is being provided. So there are state schemes also which are taking these sustainability initiatives into consideration, and they are also being promoted. So one point for us just to pause and think about is, most of these schemes are designed by state or central government, and they are being implemented by municipal bodies. But are municipal bodies by themselves able to create projects, design projects of their own, execute them of their own without any umbilical cord? This is the problem that we are discussing, right? While we are understanding that there are many schemes and there are many changes in this environment, it needs to little bit more trickle down to the municipal body level. So this is something we can look at. But let us see whether from the municipal body's perspective, whether it has trickled down. So we know it should, but we'll see, I'm going to show you some snippets to show it is working. So we can look at some examples. The Raipur Municipal Corporation, I hope there are some people from Raipur. Raipur Municipal Corporation undertook one project whereby they have done QR code based digital door numbering. This is a project they have undertaken in that city, and this has won several awards. So you can see how they have embraced technology, and by doing this, they have assured their revenue. If they know proper inventory of how many houses, they can collect the property tax correctly, isn't it? So it's just like our physical verification of stock or our physical verification of assets. So for them, each of this property is asset, right? So the moment they have cataloged it, it's made their property tax collection better, and this is one that has won award. You can see all the news bits I'm going to show you are all in the past 6 months. The other one you can see is Madhya Pradesh has bagged an award for National Water Award. They have, won for how they have managed their water resources. I'll show you one more, which is from Hyderabad. Of course, this is by the development board. It's not by the municipal body, but still you can see that they have utilized Amrit and some other central funds, and they have been able to achieve 100% pipelining of sewage and things like that. So we are already seeing evidence that it is working, but the only peeve that we have is that it's working in pockets, it's not working throughout, and that is primarily because of the difference in maturity and economic development across our states. But certainly we are seeing all these reforms in one shape or another, it is having effect on our municipal bodies. Now we'll come to the core of the subject matter. So we've sort of got an understanding that we know it is important to be self-sufficient. We understand sustainability should be an important goal. And we have sort of got an idea of the different drawbacks that our municipal bodies have. And we are seeing that there is some change in the government's environment to improve it, to overcome all the weaknesses. And we have seen a glimpse of some evidence that some of these things, they seem to be working, right? So now we will try and see what are some of the strategies that the municipal bodies can adopt so that they can further their journey in this big milestone towards this milestone, right? So we are going to look at few particular things. First one is the different ways in which revenue can be augmented. So when we are saying augmentation, here we mean it in the sense of improve. How can the revenue be enhanced? How can it be improved? So this is one. So that my own revenue improves and my dependence on the government, the other two tiers of government is reduced. So, and I become autonomous. So this is first one. The second one we are going to see is about PPPs. So PPP is a slightly different concept. So per se, when we think of our economy, we think public sector, private sector, not for profit, right? So, but this is a space where public and private are working together. So there are a lot of new concepts surrounding it. We will have a glimpse of it. The third one is municipal bonds. This has become a very important and very upcoming and popular source of fundraise. So we will try to understand how that can also help in this journey. Last but not least, we will look at some other innovative approaches also. So the moment we cover these three, you'll be able to appreciate that a combination of them also could work. So we will look at them also. So first is revenue augmentation. So as far as revenue augmentation is concerned, first let us try to understand why this is required. While we have a little bit of background already. The first is the municipal bodies themselves do not generate much own revenue, but they have a lot of infrastructure expenditure obligations, right? So because they have to, our urban areas are bursting in their seams with population. So they have to service a large part of the population, but they don't have their own money. This is one problem. The second is, we know our population is increasing, right? So now we were this 40 crores is going to become something like 80 crores. We are going to double our urban population over the next 30 years, which means, so presently we are about, the urban population is about 35% of the total population. But in the next 30 years, we are going to become 50% of the population. So you can understand the increased pressure on municipal bodies, right? So this is very apparent. The third is, for all municipal bodies, property tax is the primary own source of revenue, right? So this is the levy that is devolved to them. So they are allowed to collect this tax. There are others also, like some user fee, usage fee, etc. But as of today, property tax is the primary, source of revenue for them. And through the life cycle of property tax, like from when I identify how many properties are there, how I am valuing them, how I'm, sending the demand, how I am collecting, this whole process, in each stage, there are many issues, inefficiencies are there. So therefore, first of all, our collection rates are poor. Second is, the tax we charge itself is a little lower. Like this, some fundamental issues are there, right? So this data point is from 15th FC's report. So what they are observing is that currently we are somewhere around 20,000 crores we are collecting as property tax, right? So they want it to reach 40,000 crores by 2024. Many of the measures that we have seen to date they have significantly been discussed by the 15th Finance Commission in their report. So you will find that they have given a lot of focus on how this municipal finance can be improved. So I'm showing you a snapshot from a property tax reforms toolkit, right? What you're seeing this side is a property tax reforms toolkit. From that, I'm just showing you a snapshot. This is available on City Finance's website. It's a joint study conducted by MOHUA and Janagraha. So what you will find that in each stage, as I was telling you, through the life cycle, there are issues, right? So this document makes a recommendation on each step, what can be done to improve, right? Like enumeration. Enumeration is basically identifying my taxable properties. So how I can improve it, how it can become accurate. They have made recommendation. Valuation, how can I value? Instead of going with annual rental value, I can go for capital based value, right? So annual rental value is not a good measure typically to determine the property tax. So therefore you are rating the property at a lower tax rate. So, but you should do it at market value. So things like that. All these recommendations are there in this document. The third step is on assessment. In assessing itself, there are properties which have not come within the bracket of assessment, which are assessed in the wrong category. All these issues are there. And even if all this is done, it is not recorded in a proper register. So if I don't know who all I should bill, how much I should bill properly, how will I bill them, right? So then obviously the question of collection and my revenue being poor, it becomes a distant dream. It's obvious, isn't it? So if we were to look at it in a company's, if in your auditor's perspective, if they are a company, what we will say, first you have to ensure that the basic, these controls are fixed, right? So this document talks about this basic streamlining. The other is billing and collections, how they can improve that mechanism. And last but not the least, they are also talking about transparent and easy to use reports so that everybody knows and they can monitor and control it easily also. So through this life cycle, all these measures are recommended, and many of the recommendations from this toolkit, you will find that across different states they have implemented, and there are a lot of success stories. So what we will see is, particularly on revenue augmentation, what are the approaches? So while we understand that property tax is the main source of revenue, but what can be the other approaches that you can take? One by one, we will see. First one is property tax reforms. That's what in detail I have discussed to you, and that is oriented towards increasing revenue collection directly. So all these measures, updating your registers. We saw one news snippet on QR codes. You remember that is particularly towards this. They made it QR code so that the registers, with you scan the QR code, you will know where they are, what is their status in the property tax register. So they made a system like that, right? So that becomes very important. Increasing the tax rates, tax base and the rates, this is also very important. Otherwise, the amount you are billing itself is not commensurate to the economic development. Other things like improving the assessment of properties itself. Then we also have new fees and user charges, where for other services you can charge them. So generally the global experience has been that pay per use or volumetric charges is a good way in which you can charge the user, because for each use, if he is paying, he's more willing to pay than a bulk collection. So therefore, these measures are also there, and we know that other cess like solid waste management cess and other user charges are now slowly, we'll find cities to be implementing all these things. Other thing is leasing municipal property. This is only common sense. So we know that most of the municipal bodies have a lot of their own space. They may have complexes, they may have shopping centers, they have all this. They may even have empty plots which they can lease out for parking or things like that, right? So you'll find that a lot of smart city projects are surrounding better use of municipal property. So this is another measure. Pursuing economic development. So this is a sort of a slightly indirect one. So basically what we are trying to say is, if you incentivize more equal or more well spread economic development, then the business activities increase, the economic activities increase, and therefore your revenue, your tax base also increases, right? So when there is more development, you will be able to get higher tax rates. So this can be done through incentivizing, zoning changes. You ensure you create IT corridors, business corridors, all these things, right? So you encourage all this development, it helps. Leveraging technology, extremely important and extremely successful also. So across, we have seen all these IT enablement measures have significantly improved both transparency as well as the completeness of collection. So this helps in reducing costs and increasing efficiency. It should be obvious. The other is participating in regional, ensuring there are regional partnerships. So when municipal bodies collaborate with neighboring municipal bodies, sometimes it's possible that while municipal corporations are very large, it is possible that municipalities or the nagar panchayats might be very small, right? So when neighboring 2-3 nagar panchayats pool together their resources, then they might find that they'll be able to better leverage on costs and resources. And therefore we have other concepts like pooled finance, etc. They stem from this particular approach. So these are all some of the approaches by which municipal bodies can augment or enhance their revenues. So, but all this sounds very nice on paper. Is it workable? Is it practical? So this pragmatic questioning, not just because we are chartered accountants, but also as citizens, we have this, right? Is it possible? Will this ever get better? That sort of thing. So I want to show you some positive news. So so that you believe in this mission, right? So this particular snippet I'm showing you is from our own CA journal. In May 23, this Jharkhand success story is there. So where you can see that they have, if you try to recall my other slide, you can see they have number of properties they have tried to, the enumeration they have reworked, unassessed they have tried to address and ensure it is all assessed. They have decreased the arrears, they have embraced technology by digitizing, they have promoted digital payments, and with all this, what did they achieve? They were able to collect more than 90% of their dues, which is what the Amrit and JNNURM, these two are schemes. The scheme guidelines required them to do this, and by doing all these measures, they were able to achieve this, right? So Jharkhand is also the first state where capital value-based property tax has been adopted. So this again, to access 15th FC, there are certain conditions. This was one of the conditions. So updating the slabs, property tax slabs, is one of the important conditions. So you can see that it is not theoretical, but just one is not evidence, right? So I'll show you a few more. so that you have some overwhelming evidence to take back on this, right? So this is the Mumbai Corporation, Brihan Mumbai Corporation. 95% of their revenue target they have collected. In fact, I was very surprised to see this. Their revenue 4,574 crores they have collected, right? This is, you can see it is a very recent news, March 23 news this is. Similarly, in Delhi, they have been able to collect 1,100 crores in just one quarter they have collected, right? So imagine if this continues, that is where sustainability comes, right? This sort of measure, if it continues, then you will find that the municipal bodies will become self-reliant, right? But you will say these two are cities. How come that is not enough evidence? We will see some more evidence. You can see that in Guwahati, the similar success stories there this year's collection was 53% more than last year. Then you will find that the Pimpri Chinchwad, they have collected 300 crores in 82 days, less than 3 months. And this municipality, ULB, has even gone for municipal bond issue just a few days back. I'll show you that also. Similarly, you will find the MBMC also has managed to make huge collection. So therefore, this is just past 3 to 6 months information I'm showing you. So we are seeing that while it is taking time, you can see that all these reforms, how much of monetary impact it has. It's a huge number, right? So it has a huge improvement. So we are seeing some positive moves. So that was on revenue augmentation. So we saw the different approaches to augment revenue, and we also saw how some success stories of how it is working out. Now what we will do is we will look at PPP. So as far as PPP is concerned, as I said, it's just common sense. Basically, it's a collaboration between government entities and the private sector, but towards providing public services and infrastructure. So it is not other activities, it is towards providing. So for municipal bodies to do their job, if they partner with private entities, then that becomes PPP, right? In PPP, you will be contracts with private sector to design, build or rehabilitate because there may be existing assets which just require revamp or upgrade, right? So therefore that word is also used. Finance, operate and or maintain public infrastructure or services. So we look at some examples also, so we understand this clearly. So basically PPP is considered to be a win-win for both the private sector and government. How is that? From government's, you are able to get access to good management, managerial expertise, good technical know-how, and you are able to sort of offload some of the risk to the private sector. The other important thing is, given that they have a dearth of financial resources, that financial resources you are able to take it from the private sector. So this makes it a very good win for government. From the private sector's perspective, this size of projects where so much land is required, so much government resources need to be used, where some concessions may be required, even in some cases where some large scale licensing, routing, all these things are very difficult if you are simply a private party for you to get, right? So when you are working along with the government, you are able to get access to these things, and these are called concessions. We look at it a bit later. So therefore, PPP is generally seen as a win-win for both government and private sector. So I'm just showcasing some particular projects to you. So these 3 projects I pulled out from Niti Aayog's website, some of their successful or some of their PPPs that they are promoting. One is on model concession agreement for e-buses. What they mean is electric vehicle buses. So this is basically for the private party will invest on the buses. They will run and operate the buses. And so that's what it is about. For that, the private parties are given certain concessions. So it is called a concession agreement. So this is sort of we can think of it as a subsidy in kind. Like in this particular example, they are being given access to the bus routes. of that city. They are being given access to the depots, bus depots. They are being given access to the grid so that the vehicles can be, charged. They are being given access to the substations, and setting up substations, etc. is being done. So like this, certain concessions are given to them, and this is a PPP model. They are encouraging this, right? So you can see, common sense, it is a electric vehicle venture, so it is a SDG or sustainable venture also. So this is one. The other, which you may have also read in the news, is on redevelopment of railway stations. So where the maintenance and improving the looks and look and feel, etc., is being done under PPP. Sorry. The other example is also they are promoting ecotourism in Lakshadweep and Andaman and Nicobar Islands, right? So this also you can see where obviously the biodiversity, marine life, and the geography there is something to be preserved. So they are trying to bring in very responsible ecotourism in the islands, and therefore that also they are trying to do through PPP. So these are some just samples of the type of PPPs that they are trying to do across India. But this is okay. But whether this PPP model will be suitable for all types of project, so this is something to little bit think about, right? So we should understand, because PPP has some pros and cons. So we should understand where to use it, and there are certain principles for it. The diagram that you are seeing now is I have taken from the PPP reference guide, which is there in the pppinindia.gov.in. Please, I encourage you to go through that. It will give you a very good idea on the subject matter. And this has basically taken some inspiration from World Bank's documentation also. So you'll find that it's quite comprehensive. The document itself is quite comprehensive. So if you think of this as a continuum, where the left side of the arrow is pure private, it is done only by in like a private agreement, and the right side being tasks which are purely handled by public sector, purely done by government and its agents. So if you consider this as a continuum, on the right end, purely public, what all you can think of: licensing, regulation, energy distribution, perhaps even things like control, checks, some audits, some perhaps whatever is done by pollution control. All those things will be purely public, where the social welfare aspect is very important, and therefore from a regulation and control perspective, it is kept as fully government. On the left corner of the continuum, we will find things like where some janitorial service or some security service is fully outsourced, where there is some management contract for what of O&M of the water utility, where you are giving a contract to design and build the road. That's all. Design, build the road, go away, which is the way most roads are done, right? So all these are pure private. These are not considered PPP. So this is more for understanding. Okay. Then what is there in between these two extremes? One extreme being licensing, the other extreme being pure contractual arrangement. There is something, a gray space between, right? So that is where PPP exists. One example is design, build, finance, maintain a new hospital facility, right? So imagine a situation where one new hospital, you are allowing them to do this. So what happens is, here government pays for the asset, and it is conditional on availability, right? So the hospital bed space should be available. So, but the government will pay for this. So this sort of arrangement, this is one example. Second example is there is an independent power producer. So they have set up a power plant. So design, build, finance, operate, maintain. For example, a new wind plant. So where what happens, government owned off-taker pays for electricity supply. So what happens is, typically the asset is owned by the private agency, but government will pay for the electricity that is supplied to them. This is another one. Third one is airport concession. Airport concession is a case where design, expand, finance, operate, maintain. So this is a case where the user is paying. So the moment you land, as part of your air ticket, this is charged to you, right? So, and also you may get some revenue from the retail. So this way you are funding the private entity, and they are basically operating and maintaining it for you. So whatever monies they have spent. So overall, if you look at it, upfront between the government and the private party, they are spending some money. And then over a period of time, the private party is recovering this either from government or from citizens, or a combination of both. So this is the summary, the commercial summary of the model. We look at few other examples also. So therefore, the circumstances in which we will typically use PPP is, one is the project is not viable on its own. So it is economically viable, but financially unviable. So that type of project where it is socially important or environmentally important, but it's financially not viable. Second is risks are very high. Either private or public on its own cannot bear the risk. So they are sharing the risk. If you look at all the projects in red here, they are all cases where the risk is shared by both parties, right? So that's one. The third one is where it is something very specialized. So the government lacks skill sets by itself to handle these projects. Typically, these are the type of projects where PPP is undertaken. Some other typical features of PPP are that, one is there will definitely be a formal arrangement between government and private sector, and this will usually be long term. So formal arrangement meaning it will be a proper PPP agreement with the detailed terms, with what outcomes are expected, etc. very clearly done. So just like how for a power purchase agreement, if you people have seen, it is very detailed, be like a booklet, right? So like that, all the details of the arrangement will be properly charted out and will be a formal arrangement. Second one is substantial risk. You are sharing it with the private sector. So a lot of risk is transferred to private. Third one is performance linked payments will be there. So where some measurable performance standards in your formal arrangement you will state. So for example, if I am giving the operating and maintenance of LED lights of the city to a particular vendor, then I expect that 98% of the light should always be in working condition, right? So things like that, and I will be stating how this will be measured. There will be a central control system by which that report will come, that will be seen. Once it is checked, it will be paid, things like that, right? So therefore, this is another very important feature of PPP. It is performance or outcome linked. Only if that is achieved, they will be paid. So as you can imagine, PPP can get quite complex and confusing. This is because there are so many varieties. It can be done in so many different ways. So these are the three different, how can we say, bases on which we categorize them, right? So one is based on what is the type of asset that is the subject matter of the PPP. That is one way. The second way is, how does the private party get paid? That is another way. The third way is, what are the functions that the private party does? This is another way. So these are three bases on which you can categorize the PPP. So we will look at that, and we'll also learn some terms. So before we get into it, like a moment to understand why are we trying to learn this? What is its importance? So both, if you are going to be a consultant, advisor, accountant, auditor for either the government or the vendor or the contractor involved or any of the parties in this whole chain, you will need to understand PPPs, because that impacts the way in which you are determining the viability of project, way in which you are going to account the transaction, as well as way in which we are going to report the transaction, right? So it is very, very important for us to understand the PPP in detail, so that we know the accounting treatment and the financial implication very clearly. So this is the reason why we are trying to understand. I'll get into it. Type of asset, very simple for us to understand: greenfield or brownfield. We know this even in valuation, we use these terms. Greenfield is where it's a completely new asset. Like I'm creating a new wind farm, I'm creating a new solar farm, I'm building a new bridge. All these are new assets, so it's greenfield project. Brownfield projects are where an existing asset I'm upgrading or I'm just managing, right? So our railway station example, where you are upgrading the railway station or airport, that will be one. Or if you are just going to, let us say, maintain the toll plaza, then that becomes a brownfield project. So this is, so first basis is gone, which is type of asset based. Second one is depending on how the private party is getting paid. So already in our example, we saw two, right? One case where the user will pay, user meaning the citizen is paying. Another case where government is paying, right? In user pay, what happens? Example can be your toll roads. So basically the private party provides a service to the user and generates revenue by charging the users for the service. So whether it's toll roads or parking or, things like that, you can understand. The other is it may be supplemented by subsidies from the government, which may be performance based or output based. So it could be that you have to charge the toll at a subsidized rate, and the government might be, augmenting it with some subsidy so that it becomes viable for the private party. So ultimately, they will never come up with a case where it is not viable for either party. Okay, so that is not the intent of PPP. The intent of PPP is to ensure it's a viable project for all parties. So, but they may do it as a combination. If it's not possible to overcharge my citizens, then I might augment it with some subsidies from the government also. So it's important to understand. The other one is where purely the government is paying. Government is the sole source of revenue for the private party, like payment for maintaining solar rooftop of government buildings, payment for maintaining, LED lighting. So government, and there are also other things which are called as annuity payments. Okay, we will look at one example in a bit also. Annuity payments are, you consider all the expenses that the contractor has to, or the concessionaire has to incur, and for all that to compensate them. So that could be a monthly, half yearly, semi-annual payment, right? So that sort of payment also is there. Government payments can depend on the asset or service being available at a contractually defined quality. So in all the cases, you can see that it can be subject to satisfactory service or product. So that is one big difference in PPP, where we are trying to make it performance based. So this is another feature to observe. So two bases is over. We will look at the third basis, which is based on what functions the private party is responsible for. Now, the moment you look at the screen, all this you might boot, BTO, BDFO, or DBFO, or so many are there. So I will preface this by saying that these are just terms for convenience, so that at a glance you can understand what this contract is for. But my suggestion is, even if something says BTO, it is possible when you read inside, you might find something else, right? So don't go just with this name, but it helps to understand this terminology, right? So the first one is O&M. All of us understand operation and maintenance, very clear, no problem. They are only maintaining the asset, remains the property and possession of the municipal body. This person is only a service provider. They are doing O&M and they are going away. That is first type of, depending on function of private party. Second one, I have clubbed a few, right? Design, build, finance, operate, maintain. DBFOM, one is there. The other is design, build, finance, operate. The third one is design, construct, manage, finance. In all this, if you see, the main reason you are going to the private party is because of the design factor, right? And sometimes also because of the finance factor. So what you will observe is, in these cases, they might be technically complex, where the know-how or skill is not available in-house with the government. So these cases, usually I have clubbed them. That is one. The other is where build, operate, transfer. What will you do? You construct an asset, you operate it for a while, and after that, let's say 3 to 5 years, after that you transfer it to the municipal body itself and he goes away. So that sort of a thing. The similar ones to that is build, own, operate, transfer. In the first case, it is possible that the asset, when they are constructing, also remains the property of municipal body. In the second one, for temporarily, it is owned by the contractor and then it is transferred back to the government, right? The third one is build, transfer, operate. So where you construct, you transfer its full, title to the government, And then you do a AMC also for a period. You do a O&M for a period. So all these also are different ways in which PPP works. Apart from that, there can be plain good old lease. There can be franchisee arrangements. There can also be something called as private finance initiative. Private finance initiative works in a simple term. We can say it is like venture capital or private equity for municipal bodies. So where private parties are funding municipal bodies. So that sort of arrangement is called a PFI. PFI is very nascent and emerging. So we don't have much in India, but that is also there. Last one is very important. You may have come across this term. Now also I used it in a couple of places. They are called concession agreements. And the contractor is called a concessionaire. The typical meaning of this is one who holds a concession or a right granted by the government to conduct a certain activity. So this is a scenario where sometime back I was telling you it is possible that government may not financially pay. We saw the government pays, right, in the previous one. It might not be a financial payment. It might be partially in kind also as concessions. So this is an example of that. This is a model concession agreement, one snapshot of it. This I have taken from Niti Aayog. You can look at the detailed agreement. It's a very big document. As I told you, because it's a formal arrangement for the long tenure. So it will have all the details. I want to just highlight a few things for us to little bit appreciate what we mean by concession. This is particularly for the model electric buses. We were talking about one project, right, in the previous slide. This pertains to that. So you can see from the terms, if it is readable to you, provide routes. This is one concession. Providing the land, buildings, construction, immovable assets. This is another construction. Providing concession, sorry. Providing road connectivity, boundary, maintenance deposits. This is my maintenance depots. This is another one. This one very important because this is a electric bus project. So therefore they are saying they will sort of provide or cost to be provided reasonable support to the operator in procuring electric transmission lines and substation as specified. They've given the details there at locations within 500 meters of the depots. So you can see how they are giving that, they are facilitating that ecosystem so that this project becomes viable, right? Another is upon written request, they will also be given access to necessary infrastructure facilities, utilities, including water and electricity. You all know how difficult it is to get all these connections. So if the private party were to instead sort of invest their own time and money in getting this ecosystem ready, let us say in a state or even in a city, then you can imagine how much it will affect them, right? So when this concession is being provided by the government, it becomes attractive for the private party to do such projects, right? So this point, I just wanted to show you a live example of a concession agreement to help understand. So these are some terms also. Concession agreement per se, I wouldn't say it's a type of PPP. It is more like it's a where it is partly in kind and in cash, then that sort of arrangement typically becomes a concession agreement. We will look at some more terms. These are very important in this space, right? This is not a, please don't mistake this to be a type of PPP. VGP is viability gap funding. You might have read this in the news or whatever. So this is basically a sort of grant support that is given by DEA. DEA is Department of Economic Affairs, which is part of our finance ministry. So what is this VGF? VGF is basically designed to provide capital support for PPP projects, particularly, which would not otherwise be financially viable. So what are we saying? It is economically justifiable or it is socially required, but it is commercially not viable. Right? Because of the reasons we saw, right? Because it takes a very long time to pay back or because there's no revenue from it, because of all these reasons. So if we continue with that, then what will happen? These projects will never get done, isn't it? Because government doesn't have money, private party will not be interested because it's not money earning. So therefore, there is this intervention saying, government says, I will, this viability gap, suppose I'm saying, I expect a ROI of 18%. but in this I'm getting only an ROI as 12%. Then that 6%, which becomes the viability gap, that will be funded by the DA. Of course, I'm talking as a return, but they do it as project cost. So suppose I say this project costs me 1,000 crores, I can financially, it is viable for me to bring 600 crores. So 400 crores through this VGF, they are funding. So that is the logic. So VGF has the effect of reducing the revenue required to recover costs and provide financially attractive return for the private sector. So basically it's a subsidy or a grant support to encourage private participation. Support on this scheme is available only for infrastructure projects. This is very important, and these are some of the conditions of this grant. Where private sector sponsors should come in through a proper competitive bidding process. So this is very important. So otherwise they will not be funding it. So these preconditions are important to understand. But VGF has been very effective in encouraging PPP. I've just given a snapshot of the current guidelines. Please bear in mind that this is it keeps changing, but I wanted to give this number because it will help you to appreciate how significant it is. It's not a small amount. It's quite a big intervention, which definitely is helping. In economic sector projects, which means that for roads, bridges, things like that, right? So for that, up to 40% of the total project cost, they are willing to fund. For social sector projects like water supply, sanitation, things like that, housing, things like that, they are willing to support 60%. And for pilot demonstration projects in health and education sector, so this has come, you can see very close in the toes of COVID. So there they are willing to fund up to 80%, particularly if it is innovative and all, there are some conditions there. So, and they are also willing to additionally fund 50% of the OPEX for the next 5 years. So you can see how they are concentrating on sectors which require that sort of, obviously those projects will not be commercially viable, isn't it? So those types of projects they are trying to focus on. So this is on VGF funding. It's an important term to understand. So I thought I will explain. What we will do is this again, the whole thing, while it sounds interesting, it might seem very, how to say, theoretical. So I thought I will just try to show you one example of how a contract or an arrangement will work, so that you are able to visualize. Typically, we look at road contracts, which is, I think, at this point boring. So we will look at some example where we are thinking how it will work. So there is another term which is called hybrid annuity model. So I have picked this from PIB just to help you to understand. So this is, in this particular example, the government is funding 40% of the project cost in installments which are linked to physical progress, right? The private player who is selected through the bidding process, they have to bring in 60% of the project cost. So if something costs me 1,000 crores, 400 crores government is willing to pay me, 600 crores I have to, as a private player, I have to bring in, right? And the revenue source for me is that state government will they will charge toll collection and they'll give it to me. So this is, as I told you, it is the example of road. So it's toll collection. I would like to give you an example of, let us say, something like there is a waste cess, solid waste cess, right? So there are arrangements where the private contractor is arranging for all these trucks. He is investing in these trucks which go and collect garbage, right? So the user is charged some solid waste charges, user fees, and that can be collected by the private party. So there are many variants in this. Either the private party directly collects, or typically what we do is it is collected by the municipal body and then it is shared. It is a revenue sharing model is what is usually the arrangement. So we'll take an example where I am doing garbage collection. So I am the private party, I am collecting garbage, and the users are, for this service, paying to the municipal body a solid waste collection fee. That fee, revenue sharing, they are doing with me. So the government is paying me a sort of a share from the collection that they are doing. So this sort of arrangement is called a hybrid annuity model. And why we are calling hybrid is because the private player is both involved in the capital investment, because when I bought the garbage collection trucks, 60% of the capital I have invested and 40% the government has given. The second is I also have a share from the revenue. So therefore it becomes a hybrid annuity model. So we look at how it works, right? So I think I have some, yeah. So this type of arrangement, obviously, as you can see, it is a concession arrangement also, because you are given the routes, you are given a lot of other support, and therefore it becomes a many cases even the people will be provided by the government. The Paura Karmikas who are already placed, they will be using these trucks, right? So therefore it becomes a concession. I become a concessionaire, this becomes a concession agreement. So the concessionaire is bringing 60% of the project cost. The government is bringing 40% of the project cost. This 40% that the government is bringing is what we are referring to as viability gap funding, VGF, right? Then what happens? So this is in the construction period. The moment the operation starts, the concessionaire is responsible for O&M. So I ensure the trucks are regularly maintained. I ensure they are cleaned up. I ensure they are all in working order. They are going to the correct routes, all that, right? So I will be doing that. And for this, the government is paying me as per the HAM, right? So they will be paying me for my O&M cost, they'll be paying me for my interest payments, they will be compensating me for whatever, a percentage of the collections they make, they will be sharing it with me. In this example, it is 15 years, so, but whatever the term for which the concession agreement is, they are going to compensate me. I want to pause for a minute here and state that in this, you can immediately understand for somebody to arrive at this hybrid annuity model and arrive at the terms and conditions for the concession agreement also, a lot of help they require from professionals and experts like us, because this viability has to be worked out, this projection has to be made, right? So you have to determine the IRR, all this has to be done. And in many cases, a lot of work is involved in this. So it's a very interesting space to work in. And as the project continues, based on this share of user fees which I am getting from the government, as a concessionaire, I will service my debt. If I've taken a loan for my 600 crores, I will service my debt. I will treat that will also have my share of profit, etc. Right? So this is sort of for you to little bit visualize how the arrangement happens. So there is a construction period where I put in some money, the government puts in some money. So there is a public-private partnership. And then when I'm running it also, I am doing certain activities which as per my agreement, and the government ensures I'm doing this properly. They check the performance, and based on that, they keep paying me some annuity. So this sort of agreement arrangement is what we are. This is one type of funding model. As you can imagine, there are many variants to this, but this is just one very common example. I want to just link it up. We saw Amrit sometime back. We saw it is a responsible and sustainable scheme example for us. In Amrit scheme also, they have a condition that VGF will not exceed 60% of the project cost. Of this, central assistance will be no more than 50%. So in our example, what they are trying to say is, if the project cost is 1,000 crores, government will not fund more than 600 crores. And out of 600 crores also, maximum only 300 crores will come through CA, which is central assistance. The remaining 300 crores should be borne by who? It should be borne by the state government, right? So, or the urban local body. So that is what they are trying to say. So here is where the thing comes. So here they are, you can see how they are encouraging them to become self-reliant by saying that the ULBs may augment and raise this share of their funding through alternative sources like municipal bonds, accessing capital markets, loan credits, state grants, Central Finance Commission grants, etc. So all this they are allowing. Plus they are saying funds earmarked by multilateral or bilateral agencies. If something is already earmarked, let's say In our example, it may be earmarked from Swachh Bharat or some Swachh mission related, some funding by multilateral agencies. Then they are allowed access to those types of funds also. So this sort of helps you to understand how this emergence of PPP ties up with emergence of our different reforms in this sector also. So I hope the viewers are able to appreciate this link. So now we have sort of broadly understood what PPP is, what are its types and how it generally works. So let us try to understand. We know all these, it comes with pros and cons, right? So let us look at that. First, as always, we will look at the challenges. The challenges with PPP, I think from the discussion itself, it will be apparent to you, are that it is complex, right? So a lot of resources are required even to develop the project, etc. And in their over enthusiasm, sometimes the revenue assumptions may become unrealistic. So this is one big problem. The other is political regulatory risks are too high. So you might have some hesitation from private parties to come in. The other is always we have this concern about delays from government in meeting their commitments, especially if there are concessions or especially if they have to give some permissions, licenses, etc. So that concern is there. Government is not prepared for contract renegotiation or sort of basically to renegotiate terms of concession agreement. There are no proper institutional arrangements or mechanisms as of now, right? So suppose you start with a PPP and then due to some change in circumstance, if there is it becomes unviable for you, then for you to renegotiate, the mechanism is not very clear. This becomes a risk because these are all 10-year, 20-year projects. So you need to have that becomes an issue. Unforeseen events like we know COVID or change in crude oil prices, all these things could be some events which can cause change in circumstance that becomes a risk. Capacity issues within the government for contract management. So while we have said that you have to constantly keep monitoring the performance of private party, but since the government has some capacity constraint, that might become a difficulty, and because of that you may have inefficiencies. So which means one strength of PPP becomes ultimately its weakness, isn't it? So these are all some of the challenges, but we are looking at the challenges more so that we don't take the benefits at face value. We want to take it with a pinch of salt. It certainly cannot be denied that these benefits exist. So we are seeing, evidence to the effect. So we are seeing access to private sector, risk sharing, improved accountability, cost saving, faster project delivery, innovation, etc. So all these benefits are there. So therefore, it is, as always, it's a pros and cons thinking. And while these could be the potential risks, definitely the benefits outweigh. Given the rise in PPPs, that would be the trend that we are observing. So this sort of wraps up PPP for us. So I hope you've all sort of got a glimpse of the type of projects that we see across India. So we saw the first strategy, which was on revenue augmentation for becoming self-reliant and self-sustainable. Second strategy, PPPs, particularly they can help with sustainability, right? From our discussions, I think it will be clear to you, particularly sustainability. And of course, because the financing also is shared with the private party, it is helping self-reliance also. Now we are going to look at municipal bonds. So municipal bonds are basically, I think all of you being chartered accountants, you'll be very familiar with how the market works. They are basically non-convertible debt securities, right? Similar to what we colloquially call as debentures, bonds, etc., right? Same instruments, but they are issued by municipalities, statutory boards, corporations, authority, trust, agency, or any special purpose vehicle established or notified by a state government or central government. I have a particular reason to read this description thoroughly because I come across this confusion many often. Just because the name is Muni bond or municipal bond, it's not necessary that it should be issued only by municipal bodies. That is a bit of a misunderstanding, which I take this opportunity to clarify. So this is the definition which SEBI has given. So SEBI allows that any special purpose vehicle, if it is established, notified by the state and central government, then it can raise money through municipal bonds issue. So that is the definition. The only condition is the securities will be non-convertible in nature and they'll be debt securities. Those are the only conditions. So I think the benefits should be very obvious to you. I won't do this fast so that you have some time for quick Q&A. So from a ULB's perspective, obvious benefits, it's a very valuable funding source. You can raise large amounts of money, and usually we have seen municipal bodies need hundreds of crores, right, for their projects. So it becomes a good thing. Third is you are able to peg the coupon rate or the fixed rate. The interest rate gets fixed. So the potential risk of interest rate rise is, you can avoid it. So that's a good hedging for the ULB or the municipal body. The other is this type of fund is available long term. So you can have 7-year, 10-year bonds being issued. So it can be a long-term money arrangement. If the ULBs manage a good credit track record, meaning I raise once and I properly service the interest, and end of it I give back to the bond holders properly, the principal. If I'm able to do that, then the subsequent municipal bond raises, because it's not like a one-time activity, right? You become an established player in the market, and that credibility helps the subsequent raises to be much easier. And this better coupon rate, I would say take it with a pinch of salt, because the coupon rates are to a great extent affected by market interest rates also. So, but you may get a better rate than others. That is possible. So, but better coupon rate is subject to market conditions. So these are benefits from the ULB's perspective. Now coming from the investor's perspective, important thing is it's an attractive investment in that the municipalities or the whoever is raising money, they are credit rated, right? And typically only if they are AAA and above, they are you see a uptake in the market, right? So, and the credit rating process is very transparent. All of us know that it works quite well. It is definitely less risky as it is similar to a government security, right? It is same like getting a bond from, even if this goes kaput, then the state government is going to make good. So you have some sort of trust like that because government is willing to fund it. The important sort of benefit from a investor's perspective is it's a liquid security. So because it is listed, marketability is there. This is one very good benefit. So you can see from ULB's perspective as well as from market's perspective, this is it's a very lucrative source of finance, right? Now we will look at the Indian municipal bond market where it is. So what you are seeing in this is the bars are representing the value of raise. You can see everything is 200 crores, 150 crores. Here you can see Indore, Anand has raised 250 crores, right? So these are all this, but after Indore now PMC has raised, I will show, I think it's 200 crores they have raised. This is just 29 July they have raised. So I'll show you that also. So, and if you look at the rates, typically you can see it is on this side, you can see the rates. So like Indore has raised somewhere around 8%, somebody has raised 7%. So you can see everything 10%, all this. So this is the history. So there have been 13 city corporation fundraisers in our history, and totally they have raised close to 2,200 crores. Now it will become 14 and I think 2,400 crores. That is not updated in SEBI. I've taken the statistics from SEBI's website, so I've left it as it is. So average issue size you can see is around 150 crores and the coupon rates around 7 to 10%. So 3 to 10 years is the tenure. So you will find that when fund is raised, sometimes 2, 3 tenures also they will raise money, because something they may need short term, some other purpose they may need long term, they may do that also. So we are observing that sort of trend also. So this is just to understand the existing landscape. So what is it about it? It is a decade old, but still it's in quite a nascent stage, right? So it's not a very huge market for India's size. It's not very big. And you'll find that the regulations allow the municipal bonds to be privately placed or offered to public, meaning being available to retail investor. Please remember, in either case, it should be listed, right? Should be listed with a stock exchange, but there is an option for them to place it privately or offer to public. And here also, Indore Municipal Corporation, that was the first bond raise which allowed retail investors to participate from the start, right? Otherwise, predominantly all the previous issues were all privately placed only. So for us to understand how do I know what are the regulations surrounding this, you will find that SEBI has issued quite a few guidance on this. Particularly, they have a regulation on issue and listing of municipal debt securities. That's what they are calling it. So that details all the things, and whatever I'm going to discuss in the subsequent slides also is discussed there. So to answer the question, now all this is there, okay, but still the market is in a very budding stage, isn't it? So is the market ready? So what we are saying is, us being, president of G20, we are seeing an opportunity, and therefore we are seeing a lot of, inclination from the top that they want to go for municipal bond issue, and they have announced they are going to do it for 30 cities. So that push is there definitely. And we are regularly seeing PCMC is the PIPLI something. I'll give you the full name. I'm sorry, I can't remember. So they have raised 200 crores very recently. You can see the date, 29 July only they have raised. So in this financial year, this is the first issue. So they have raised 200 crores. So we are regularly seeing this. So this is sort of evidence, right? But let us look at some more things. SEBI is actively encouraging municipal bond issues. In fact, they are conducting outreach programs where they are inviting, people, representatives of municipal bodies. If some of you are listening in, you are well aware of this. So they are trying to reach out and encourage municipal bond issues. And we are seeing even more newer instruments like green bonds are also being issued. So again, Municipal Indore Corporation has issued green bonds only. So that's a newer form of debt security, right? And recently, SEBI has come up with a few other colored bonds, right? So to speak. So basically, given that there is a lot of demand for environmentally responsible investment opportunities, they have come up with a host of, they have done a study for this also. One is green bonds, which is all projects which are environmentally beneficial, which are carbon negative or low carbon, which are renewable energy, all that. And blue bonds are cases where sustainable water management or ocean energy related, water related projects, they are calling it as money raised for that, they are calling it as blue bonds. And whatever is raised for solar is called as yellow bonds. So the fact that our regulator is stepping up and trying to meet market demand by announcing that municipal bonds can be issued in these ways itself is an indication on market readiness, right? And you'll find also other things like what you're seeing on the right hand side is the Nifty India Municipal Bond Index. This was released in February 23 by NSE. So the stock exchange, obviously, unless they are seeing some potential in this, one would think that they will not go to this extent, right? So this is again, it's available on NSE's website. You can go and see. They have, in fact, this tracker is new. It was not there before. So you can see how it is growing. This index is growing, and it is, you can see all this data collection will facilitate further, money raise in the muni bond market. So all these, we see it as indicators of good market readiness for municipal bonds. Now, okay, I'm ready to, issue bonds, but what should be which type of municipal body is, eligible? So this we have to see. There are certain, eligibility criteria for listing. And I have again here, I have given reference to the repository. It's there. SEBI has given a host of, details in the repository. Please have a look at it. So I'm going to give you the basic criteria. One is, you can see from, we understand as accountants, these are all common sense, very basic requirements to be eligible under its governing act. So first is, see, we have 4,500 plus municipal bodies, and they are governed by, I think, 80 plus different acts and regulations, right? First, that act should allow them to raise public money, isn't it? Otherwise, because they are government entities, otherwise they are not empowered to raise. So therefore, they have to ensure the governing act allows them to borrow from public. If not, they have to go and change that. So this is first. Second is they should have prepared their accounts as per National Municipal Accounts Manual, NMAM. I'm sure in the previous 4 webinars also you might have discussed and understood this. Every state has its own accounts manual also. They have to comply with either of these two, and the account should have been adopted by the state government. This is required for the previous 3 financial years. The other is they should have had a surplus of income over expenditure preceding 3 financial years. They should not have defaulted in repayment of borrowings in the past year, 1 year. Then they should not have been debarred or restrained by SEBI historically. Last one is the key management personnel who are heading the municipal body. They should not be listed as a willful defaulter. You can really appreciate that the very reasonable eligibility criteria, right? It's very fundamental. Even if these are not satisfied, then the investor is not protected, isn't it? So therefore, this is what they have done. It has gone through a long process for them to, arrive at these. And, they have taken a lot of measures to ensure it's easy for both sides. They have tried to balance, right? So this is something. But in spite of all this, why is it that in 10 years, only 13, or even if you want to say 14, only 14 issuances have happened? So we are seeing that it's very slow, right? Why is it slow? The slowness is because of the typical reasons. One is many bodies, although we are 4,500, many of the municipal bodies, even this basic criteria, they are not able to, satisfy. So basically, because they either have a negative net worth or they have poor credit history, and particularly getting the 3 preceding years accounts ready, everybody has backlog, they struggle a lot. The other is risk of opting for municipal bonds when banks and financial institutions offer a comparable debt. So this is another hesitation. When a bank is willing to give me 150 crores, without so much of overhead of compliance and complexity, why should I go for municipal bond? Although there are larger benefits to this, many people are short-sighted and they do not understand the full picture. So this is another reason for hesitation. Then there is fear of fiscal discipline. This is obvious to you. This we are seeing even in companies, right? Before getting listed, they always think 3,000 times whether we want to do it. It will cause me more problems. I have to keep things more transparent. All these, hesitations. Increase in compliance burden, again, very obvious. The other is overheads because they have to liaise with too many stakeholders. So now what happens is the moment this bond is issued, debenture trustees are appointed. So they become the custodians of that money. So its money is kept in a escrow account. So therefore, everything has to be routed through the debenture trustee, and all this becomes a complication for them. And then they have to interact with stock exchange. They have to keep track of what SEBI is saying. All this, so you can imagine the number of stakeholders increases for them. This becomes difficult. The other is transaction complexity increases because every spend out of the municipal fundraise has to be through the escrow, and you all know when you have to route it through the escrow, there can be a lot of complexities, and when people change, signatory change, everything becomes little complex. The last point, again, as I told you, is central to the whole thing. So because of poor capacities, both I don't have enough number of people I have are not skilled enough. When I'm having both these problems, they are already stretched. So when I take on municipal bond issue, etc., I'm putting further pressure on my human resources, which is really not ideal. People don't prefer that. So these are all some of the reasons from ULB's side why they feel they don't want to take it up. But I'm sure a lot of listeners here are representatives from municipal bodies, and I'm sure many of you are going to advise municipal bodies also. So the case we need to present to them is that we need to have a little bit a longer view of this, the better vision of this. And the point is that municipal bond market offers an opportunity for municipal bodies to evaluate as trusted public entities, right? It helps you to build your reputation, develop as a credible entity. So it has to be viewed from that perspective. The other is large sums of money you can mobilize, especially if you raise once and have a good track record. Subsequent raises you can mobilize without much effort. And this type of mobilization facilitates long-term planning. So this is another important reason. Again, as I told you, consecutive fundraisers will become easier, while the first one will definitely be tedious. Subsequently, people get the idea and it becomes easier. Why we are saying this reputation building, we know that this is one big problem municipal bodies face, right? Always we view them as very apathetic, entities which are apathetic to the plight of citizens. So for them to become socially responsible and, demonstrate that they are sustainable, they need to have that reputation also, isn't it? Otherwise, we'll not view them as sustainable. So this sort of municipal bond raise process helps them to become transparent, because you are going to regularize their books of accounts, you're going to ensure they publish regularly, you're going to ensure how the funds are utilized is published clearly, all these things. They become credit worthy because they're going to be credit rated not just once, after that periodically also they'll be credit rated. The other is they'll definitely be compliant, right? So because they're going to be under the scanner of multiple regulators, so they'll be compliant, and that is one of the criteria also to be listed. The other is they'll be well managed. Over a period of time, you will find that the information flows get streamlined, their internal controls improve. So generally, the organizations evolve and they are able to go to the next level. And we know that in the roadmap which we are, seeing in our mind's eye, to become self-reliant and self-sustainable entities, they need to, go on this path so that they can move in the correct direction. So these are some of the, positive reasons why we should, encourage them to go for this type of fundraise. So now all this is okay, fine, but what are we going to, do in this whole ecosystem? What is it that, what are the areas particularly where, municipal bodies are looking for assistance? So first thing to understand is this municipal bond raise itself is like a journey. We know that many entities today are not even prepared. So there is going to be a preparedness phase, and then they have to ready themselves for the issue. And then they have to be approved by the different levels of regulators. They have to be accepted by the stock exchange, etc. And then there is a listing phase. And then you raise the money, then you spend it, and you have to keep servicing your bond, and then you close. So you can imagine this is like a life cycle. So in this whole life cycle, basically they need the help of advisors at different stages, right? So things like defining the scope of work for the different stakeholders itself, understanding the applicable regulations and compliance requirements, all this they need support, right? Help with liaising with other parties who are in the process, like there will be a lead banker, there'll be legal advisors, there'll be credit rating agencies, and each of these people will ask for different sets of information, right? So all this they need help in preparing. There'll be SEBI, you have debenture trustees, stock exchange. Then you'll also have a depository, because the bonds have to be, especially if retail investors are involved, then you have to register yourself with the depository also. So you can imagine this, it becomes a larger ecosystem where more stakeholders are involved, and throughout this, they will need help. So one is in doing the preparedness study and road mapping. To suppose I decide today, it might take me 6 months or 1 year or 1.5 years to raise money, right? So that is required. If you are interested, you can go and look at the success story of municipal corporations like Vadodara has issued its success story. Indore also is available, and then historically you can find Hyderabad's also. All this will help you to understand that it's a journey. The second is this accrual accounting is one big problem for them. Even now you find that they may be doing like cash basis, end of the year doing some accrual entries, all that confusion is there. This transition to accrual is a big area where they need extensive support from professionals like that. Preparing their financial statements, I'm sure many of you already have been engaged in these types of assignments, because they'll ready the trial balance, but getting the financial statements ready, they need help. Of course, audit of accounts. Audit of accounts primarily is being done in one state by CAG and many of the other states by the respective local fund audits, right? Or state audit department as they are called. But still that takes time. So typically when they have to apply for all this, you'll find that they'll come to chartered accountants or other professional accountants for certification. So audit of accounts is another area where they need help. The other is viability studies and detailed project report. You have seen, I've given one example because they have to go with a plan to say how I have arrived at saying this project cost me 1,000 crores and I am able to bring in 400 crores, you give me 600 crores. So this sort of viability study and detailed project report, both to prepare as well as if the concessionaire is preparing to validate, they need support. And of course, continued compliance is always there. The moment they get, they issue bonds, they have to continue to comply. So therefore, all this cycle sort of repeats, right? Again, accounts need to be prepared. Again, it has to be audited, and that cycle sort of continues. And they have to do the periodic interim reporting, etc. So basically, this ecosystem provides a lot of opportunity where we can support municipal bodies and the other stakeholders in the in surrounding also. So we've seen all the, I'm trying to give you a balanced view, so that we look at the pros and cons of each of this. So we will look at the risk to investors. Obviously, bonds.
Just to your requested to please summarize the PPT at the earliest so that some question can be taken up.
Sure, Nikita, I'll do that. I have another, anyway, I have only 5 minutes. I'm done. I'm almost in the final few slides. Right. So the risks are there. You can look at the different risks. Credit risk is there, risk of default is there, disclosure challenges, interest rate risk is there, and liquidity risk is also there. All these risks are anyway associated with debt securities, and particularly for municipal bonds also, this risk is there. So that sort of summarizes the municipal bond thing. What I will do is I'll quickly take you through some approaches in municipal finances, others that are there, and then I will summarize. This is just one slide for me. I want to just be able to explain this particular different type of instrument to you. It is called Real Estate Investment Trust, REIT, and Infrastructure Investment Trust, InvIT. Right? These two are new to our market. Even the private sector has just about started using. These are mechanisms whereby trusts are created and the investor invests in shares of that trust, right? And that trust will go and acquire capital investments. And from the income generated from the assets, it will pay back to the investors. This is broadly how it works, right? Like a special purpose vehicle that is used by private investors. In the same model, it works. So this is again an upcoming type of instrument. Particularly, you can see this is given in SEBI. April to June, they have raised close to 12,600 crores through this mode, and this is now prevalent only with private sector. Of course, SEBI is looking to extend this to municipalities also. So just that the assets owned will be the infrastructure assets which we are discussing about. So this is another one. And then there are a few others like blended finance, value capture finance, impact investing, green bonds, social bonds. All this we have you might have heard about it. So these are also different ways. As far as blended finance is concerned, both public and private together when they finance, we call it blended finance. Value capture, what we mean is that the government gives particular zoning or some other, facilities so that one particular area is developed. So that sort of, you are capturing that value by a payback. So, or you give them some increased land tax, things like that. So that is value capture finance. Impact financing is by investors who are more focused on outcome. Green bond, social bond, impact bonds, we have already discussed. Offshore rupee bonds are also an available source. Pooled finance is again where we, sometime back also we saw where 2-3 municipal bodies, they cooperate and together when they raise money and when they use resources, that is called as pooled finance. So now you may recall the checklist that we spoke about. So through our discussions, we have seen that through modes like municipal bonds, PPP, and the other innovative, financing modes, definitely these strategies, it can help individually or in combination to finance the municipal body's own projects that you can plan for the long term, as well as implement, projects which are economically, socially, and environmentally responsible. So I'll quickly summarize. So therefore, we realize that there is a definite need for municipal bodies to become self-sufficient and self-sustainable. financially, socially, and environmentally. This needs a total reorientation in the governance process and a strong will at the top. We are understanding that. Today, we looked at some aspects which are relating to financing projects by municipal bodies, particularly PPP, municipal bond, and some innovative approaches. But I hope you are able to appreciate that they are all interrelated. These are just terminologies, they are interrelated. Municipal bodies need to understand the process of obtaining and managing such finances. It's where they need support. So extensive effort and capacity, focused effort and capacity building is required. There is definite need for handholding throughout this journey. So for our municipal bodies to get there and become this futuristic entity, they need help. And last but not the least, definitely as partners to nation building, we are able to support this mission in different capacities. And I hope today's session has given you a glimpse of all this. Nikita, we can take some questions now.
Thank you, madam. It was a wonderful deliberation as you have summarized. So I don't think I need to summarize the things again. Quickly taking up the questions, madam. The first question is, who regulate the municipal bonds? This is a basic question from the viewer.
SEBI regulates.
SEBI regulates.
Yeah. And it should be listed in stock exchanges.
Yeah, right. Then another question is there any requirement to obtain credit rating before issuance of municipal bond? Obviously, they
very much. Yes. Unless it is AA plus, typically it's not listed.
Yes. Then the another question is, as we all know, municipal bodies lack resources. Then how it can be possible for them to be a self-sufficient and self-sustainable? They have
yeah, that is the thing, right? So therefore, we are saying increase your own revenue. Those are the things, that's revenue augmentation. Raise money, partner with private entities which are able to give you money. So these are all the different strategies we discussed for this.
Okay, fine. Now, madam, the another challenge which municipal bodies faces is that they have low credit rating. Then when they proceed for the issuance of the bond, they have low credit rating. So how they can move forward to increase the credit rating?
So this is where I was talking about the roadmap. I was telling you that if you decide today, if you want to list, it is a journey. You may not be able to list immediately, right? This is one of the reasons where it can happen. Because if you recall, one of the conditions is that in the past 3 years, you should have had surplus. So it is possible that, for example, now if somebody wants to go in COVID year, they might have had deficit.
Right.
So therefore, they may have to wait for a bit, and by then they improve their processes. Like by then they can improve collections. By then they can, all these, some of this they can implement, right? By then they can regularize their accounting, regularize audits. Once they do all that, then in the next 2 years or something, they roadmap themselves to that issue. You will find that many municipal corporations have done that. Like for example, Vadodara, they had a roadmap where they planned towards it, they worked towards it, and then they achieved. So that is the way to do it.
Right, ma'am, right. Now the another question is, if municipal bodies generate their own funds, then can we treat like it corporation and tax them the own fund? It can be taxed.
So I'm not very sure about the tax angle, because what municipal bodies are raising, it's a levy, right? It's like asking, can I tax income tax? So property tax itself is a levy. So whether there will be a tax on that is a different, but it's a fact that if they charge something like a user fee or things like that, it attracts GST.
Right. Then another question is, are municipal bonds are negotiable instruments?
They are not negotiable instruments. They are debt securities. They are like debentures, and like how if you take a private company's, not a private company, public company's debenture, no? How it is same way. Only thing is it's non-convertible.
Right.
That's all. You will get interest. So it will have a coupon rate, and you will be paid an interest annually.
Right. Are the municipal bonds are tax-free or for the retail investors?
For now, they are not. This is another thing that is in motion. So the thing is, because it's a very nascent stage, no? So there is a thinking that if that is done, then more people will invest. But municipal bonds currently are in a stage where first they want to encourage raises. And they are not reaching real retail investors as of now. So, but it is in the works. As of now, it is not.
So, ma'am, as you were suggesting that the role of professional is increasing day by day in the municipalities. So, what is your view on the size of municipal bond market? Like, what will be after 2 years or 3 years? What you will foresee?
So there are a lot of estimates on this. Okay, I will give you simple mathematics. Suppose we assume the 30 cities, they are saying no, because we are G20 president, 30 cities we are going to go. If 30 cities each raise 200 crores also, you are looking at 6,000 crores. And the market already has 2,400 crores. So we are looking at something like 10,000 crores. But there are some estimated numbers, I think, which are much higher. I am giving a conservative estimate based on whatever I shared with you today. But there are higher estimates that they are expecting, to my knowledge. I don't have the exact number.
The municipalities are also like trying at their own level also. I believe that in Madhya Pradesh, there are 4 municipalities which are trying for this. So I believe every state is doing this.
Exactly. So I'm saying even if we estimate 30 of them will, raise money, they usually raise about 200 crores. So we are talking about minimum 6,000 crores.
Right. So coming to the another question, is PPP model is successful in a country like India?
It is. We are seeing a lot of success in PPP actually. But as with everything, we are seeing failures also. We are seeing larger talk of town projects where people walk out of the arrangement. No, so we know particularly, a lot of bad news you might have seen in the media on road projects, etc. But there are success stories also. It is successful.
Okay. And the another question is whether the bond debenture trust has to be created on like municipality wise, or each state has to create a separate bond debenture trust.
No, debenture trustees are appointed for every raise. Yes. Because for every raise, there are escrows created for principal repayment, interest repayment. So for every raise, debenture, as of now, the regulation requires for every raise, debenture trustees have to be appointed, escrows have to be created.
Okay, ma'am. Thank you. I think the questions are over now. And thank you for your wonderful deliberation in this webinar. I believe that all the viewers would have got the insights of how they can succeed in preparing a sustainable and self-sufficient municipal body. So thank you for your wonderful deliberation. Thank you, ma'am. Thank you all.
Thank you, Anand. Much appreciated. The opportunity is much appreciated. I hope I have added some knowledge to the viewers today. Thanks for the opportunity.
Thank you so much, Kriya Pramina ma'am. Thank you so much, Anandan sir. And thank you, Vice Chairperson, for joining in this webinar. And thank you all the participants. Thank you all.
Recording stopped.